So everyone's talking about Bitcoin hitting $100,000 and people are getting rich overnight while you're sitting there wondering what the hell they're even investing in? Don't worry, you're not alone. Today, we're diving into the wild world of cryptocurrency. What it is, how it works, and whether you should care. Let's start with something we all think we understand. Money. Section 1. What is money? For most of your life, money has been pretty simple. Physical cash in your wallet. Numbers in your bank account. The government prints it, banks move it around, and you use it to buy stuff. But traditional money has some problems. Want to send cash to someone overseas? Get ready for a 3-day wait and ridiculous fees. Need to transfer money on a weekend? Sorry, banks are closed. And remember 2008 when those trusted banks nearly collapsed the entire economy? Good times. Traditional money requires us to trust middlemen, banks, governments, payment processors, who all take a cut and control how you use your own money. This is exactly the problem cryptocurrency was designed to solve. Section 2. What is cryptocurrency? At its simplest, cryptocurrency is digital money that doesn't need banks or governments to work. It's money reimagined for the internet age. The first and most famous cryptocurrency is Bitcoin, created in 2009 by a mysterious person or group called Satoshi Nakamoto, who, by the way, nobody has ever identified. Bitcoin was created right after the 2008 financial crisis, when trust in banks was at an all-time low. Bitcoin's big idea was, what if we could create money that works without needing to trust anyone? Since Bitcoin, thousands of other cryptocurrencies have been created. You've probably heard of some: Ethereum, Dogecoin, Solana. They're called altcoins, or you can say alternative coins. And while they all work a bit differently, they share the same basic principles. If you're still watching, wow, I'm impressed. You're clearly as curious as I am. So why not take a second to hit that like and subscribe button? Go on, I'll wait. Thanks a ton. All right, let's keep going. So now you understand what cryptocurrency is, let's cover how it actually works. Section 3. How does cryptocurrency work? This is where things get interesting. The technology behind cryptocurrency is called blockchain, and it's actually pretty genius. Imagine a giant public spreadsheet that tracks every single transaction ever made with a particular cryptocurrency. Now imagine this spreadsheet isn't stored on one computer, but on thousands of computers all around the world, all updating simultaneously. That's essentially what a blockchain is. Let me give you a real-world example. Say I want to send you 1 Bitcoin. Instead of going through a bank, my transaction gets broadcast to the entire network of computers. These computers, called nodes, verify that I actually have that Bitcoin to send, record the transaction on the blockchain, and then it's done. No bank approval, no waiting for business hours, no one asking what the money is for. Just a direct transfer from me to you. To use cryptocurrency, you need what's called a digital wallet. Think of this as your cryptocurrency bank account. But unlike a bank account, you completely control it. Your wallet has 2 important components: a public key and a private key. The public key is like your account number. You can share it with anyone who wants to send you crypto. The private key is like your password. It should never be shared with anyone. If someone gets your private key, they can steal all your cryptocurrency, and there's no customer service line to call for help. Once it's gone, it's gone. So now you understand how cryptocurrency works, let's talk about why people use it. Section 4. Why do people use cryptocurrencies? There are some genuine advantages to cryptocurrency. First, it's global. You can send Bitcoin to someone in Japan as easily as you can send it to your neighbor. It's fast. International transfers that take days with traditional banking can happen in minutes with crypto. It's secure. The encryption and decentralized nature of blockchain make it extremely difficult to hack or counterfeit. And it gives you complete control over your money. No bank can freeze your account or tell you how to spend your funds. But there are also serious downsides. Cryptocurrencies are incredibly volatile. The price of Bitcoin might swing 10% in a single day. They're still not widely accepted. You can't exactly pay for your groceries with Dogecoin at most stores. The learning curve is steep. Managing your own keys and navigating exchanges can be confusing. And let's be honest, cryptocurrency has a reputation problem. From drugs to ransomware, it's been the currency of choice for some shady activities. So now you understand the pros and cons. How do you actually get your hands on some crypto? Section 5. How can you get cryptocurrency? The simplest way is to buy it on an exchange like Coinbase or Binance. These are basically the cryptocurrency version of stock trading platforms. You create an account, connect your bank, and can buy crypto with regular money. In the early days, people could mine Bitcoin using their home computers. Mining is the process of using computing power to verify transactions and add them to the blockchain, and you get rewarded with new cryptocurrency. But today, mining Bitcoin requires specialized equipment and massive amounts of electricity. It's not really accessible to average people anymore. Some people earn cryptocurrency directly, maybe through a job that pays in crypto or through apps that reward you with small amounts of crypto for various activities. Now that you know how to get crypto, let's talk about why people invest in it. Section 6. Why do people invest in crypto? The most obvious reason is the potential for massive returns. Bitcoin started out worth basically nothing and has reached heights of over $69,000 per coin. People who bought in early made life-changing money. Some people genuinely believe in the technology and its potential to change finance. They're investing in a vision of a decentralized future. Others use it as a way to diversify their investments, adding crypto alongside stocks, bonds, and real estate. Let's be real though, a lot of investment is driven by FOMO, short for fear of missing out. Your cousin made $50,000 on some coin with a dog logo, and now you're wondering if you should jump in too. And the barrier to entry is so low. You don't need to buy a whole Bitcoin. You can start with $10 if you want. Section 7. Should you invest in crypto? Here's my honest take. Cryptocurrency is both a revolutionary technology and wild speculation. It could change the future of money, or it could crash tomorrow. If you're thinking about investing, here are some guidelines. Only invest money you can afford to lose. Seriously, treat crypto like a trip to Vegas. It might be fun, but don't bet your rent money. Do your research. Not all cryptocurrencies are created equal. Some have real technological value, others are literal jokes that somehow became worth billions. Think long term. The day-to-day price swings will drive you crazy if you're constantly checking. And diversify. Even if you believe in crypto, it shouldn't be your only investment. Remember that for every overnight millionaire story you hear, there are thousands of people who lost money. The crypto world is full of scams, pump-and-dump schemes, and projects that simply fail. At the end of the day, cryptocurrency represents an interesting experiment in money and technology. Whether it becomes the future of finance or a footnote in economic history remains to be seen. What I can tell you is that understanding crypto now puts you ahead of most people. The technology behind it, blockchain, is already changing industries beyond finance. So there you have it, cryptocurrency demystified. If you enjoyed this video, check out my other explainer where I break down what stocks actually are in the simplest way possible. Don't forget to subscribe, and thanks for watching.